for you.
Okay.
Given the Supreme Court ruling as it relates to discrimination at universities, this is the Harvard case, there's been a big question mark of how that's going to impact companies that have either created quotas for boards, for managements, or other things. You put in place a disclosure requirement, not a requirement per se in terms of how many people need to be of diverse background or whatnot, but the disclosure was sort of a push to get people to do that. How do you think that decision will impact the business world, and how have you thought about it?
Yeah, I think, first of all, I think that decision is not directly relevant to our particular rule, which is a disclosure rule. It's a market-based solution that provides for disclosures and transparency to investors. I think that generally, though, when we've been talking, and that has been a topic of conversation with CEOs and companies, is that I think that they realize that quite successfully. We've examined that. We're very comfortable with how we're managing our DEI programs to create that environment within NASDAQ.
But you think that that's something, I mean, I've heard it from a bunch of CEOs, I imagine you have too. What are they saying to you?
Well, I think that they're asking kind of how do we want to make sure that we're examining that. And I think you obviously talk to your lawyers.
Right.
And just make sure that you understand how your programs
But don't you think a whole bunch of lawsuits
operate.
are about to come on this?
I think it's going to be, I don't know the answer to that. I can't project that. I just think that we have to recognize that, you know, Supreme Court decisions do make changes, and so you have to evaluate your programs in light of those changes.
Dina Friedman, it's great to see you.
Great,
Thanks.
thank you. Thank you very much.
Later, thanks.
All right, still to come this morning, new housing data just out. We will bring you those numbers. Plus, we've got Goldman Sachs on deck. We'll bring you the results and the instant reaction as soon as it hits. Also, what investors can expect when Tesla reports after the bell tonight. We will preview those numbers. Squawk Box will be right back.
Time now for today's Aflac trivia question. Who was the president of SAG-AFTRA during the 5-week actors' strike of 1959? The answer when CNBC Squawk Box continues.
It's crazy. Why do I feel like y'all still can't hear me, eh? Let's check CNBC real quick.
At 46% decline in advisory because there were no mergers that closed, or very few mergers that closed during the second quarter. Any kind of take up there, any kind of so-called green shoots, as we've heard on the calls this week, that would be really encouraging for them. I mean, if you look at what happened in the quarter, they have all of these impairment charges that they're taking in 2Q against the backdrop of a very weak investment banking environment, a very muted environment for trading as well. And so it's a tough quarter for them. But I think the prospect of the deal environment improving, the prospect of capital markets improving will all be encouraging as you kind of get the bad stuff out of the way today and look ahead to the future.
Okay. Leslie, thank you. Appreciate it.
The latest read on mortgage demand also out this morning, and Diana Olick joins us with those numbers. Diana, good morning.
Good morning, Becky. Yeah, refinance demand was the story last week after mortgage rates came off their recent highs. The average rate on the 30-year fixed mortgage for conforming loan balances decreased last week to 6.87% from 7.07%. That's for loans with 20% down. That rate was 5.82% the same week last year. Now, lower rates pushed current home buyers to call their lenders. Applications to refinance a home loan jumped 7% for the week, still 32% lower year over year. Applications for a mortgage to buy a home fell 1% for the week and were 21% lower than the same week a year ago. The weakness in home buying is being exacerbated by falling supply and rising home prices. Again, prices had cooled off for much of last year, but they are now reaccelerating due to that low supply and still strong demand. Mortgage rates haven't done much to start this week, still hanging in this high 6% range on the 30-year fix. Markets and investors are now digesting quarterly earnings, of course, and trying to game the Federal Reserve's next moves. Back to you guys.
Diana, Adina Friedman was just here, the CEO of the NASDAQ, talking about how business leaders she's talking to, CEOs and others, are kind of realizing that they have to adjust to this new higher interest rate environment, and that business, they're going to have to figure out ways to do business. I guess my question is, do homeowners kind of go through that same process, or is it different because you can say, I'm just not going to move, I'm not going to do things? Is there any sort of adjustment where they're gaming things out and just finally like, okay, I really do want to move at some point, I'm going to bite the bullet, I really want to do X, Y, or Z?
I think we haven't seen it yet for homeowners, especially. That's why we have no supply on the market. They're still not ready to move and trade the 3% rate for the 7% rate. What we are seeing is the new normal in home buyers. And we actually heard from the CEO of Compass saying that he believes 7% for buyers is that new normal. People are getting used to it. They're rejiggering their budgets and figuring out what they can afford at that rate. And they're still very willing to buy. They just can't find anything to buy because, again, it's those homeowners who aren't adjusting and aren't getting ready to sell.
Diana, thank you.
Okay. Still to come, a first on CNBC interview this morning with FTC Chair Lena Khan and the DOJ's Assistant Attorney General for the Antitrust Division, Jonathan Cantor, a big...
Microsoft had a huge day yesterday. Nvidia, huge day yesterday. Netflix, huge day yesterday. They were up around almost 6%. It's not every day that, you see a stock up that much pre-earnings, Huge move here. Morgan Stanley up huge. So with the Microsoft stuff, let's talk about it real quick. Here, hold on. Boom. So Microsoft stock hits all-time high on AI software pricing. Hold on, let me make sure that y'all can hear me. Okay, we're good. So, Microsoft said that they will offer 365 Copilot software to business customers at $30 per user per month. That is insane. That is crazy. That is huge because it's going to add a lot more revenue, okay, for Microsoft. That's going to add at least $3 billion in revenue per month. Per month. All right, let's try to listen to the article real quick.
Jay Savitz. July 18th, 2023, 6:14 p.m. Eastern Time. Microsoft stock rallied to reach an all-time high Tuesday after the software giant announced its pricing strategy for adding generative artificial intelligence capabilities to its flagship Microsoft 365 software, which includes Word, PowerPoint, Excel, Outlook, and Teams. The company said that Microsoft, ticker MSFT 365 Copilot software will be offered to business customers at $30 per user per month. Copilot jumpstarts your creativity in Microsoft Word, analyzes data in Excel, designs presentations in PowerPoint, triages your Outlook inbox, summarizes meetings in Microsoft Teams, whether you attended or not, and so much more, Microsoft said in its announcement. Microsoft shares jumped 4% on Tuesday to $359.49, a record high close. Earlier in the session, shares set an intraday record high of $366.78. Bernstein analyst Mark Merdler points out in a research note on the news that the price for 365 Copilot is higher than he'd expected and amounts to a price increase of 53% to 240%, depending on which version of Microsoft 365 a particular customer is using. Merdler noted that the announcement focused on Microsoft 365 and not on the more limited set of tools and software included in Office 365. The company may believe this is a further way of driving not only new subscriptions, but also shifting more users to Microsoft 365, which is a higher per user price. The company also announced that it will offer a standalone chatbot app for business customers, Bing Chat Enterprise, for $5 per user per month. Wedbush analyst Dan Ives writes that he finds the pricing announcement to be very bullish for the total addressable cloud AI market opportunity for Microsoft, with the potential to boost annual cloud revenue by 20% as soon as 2025. Citi analyst Tyler Radke likewise wrote that pricing was well above his own forecast of $5 to $20 a month. While general availability is still likely many months away, we see this as an incremental positive, he writes. Write to Eric J. Savitz at eric.savitz@barron's.com.
Again, this is a huge move by Microsoft. This is what happens when you almost become a monopoly. You control everything. They might as well just buy OpenAI at this point, because why not, right? Now we also have Microsoft partnering with Meta. Let's check that real quick. We're gonna go to Barron's. Actually, we're gonna go to Wall Street Journal right here. Meta Microsoft team up to offer new AI software for it's all about AI, y'all. It's all about AI. It is all about AI. Microsoft will release a new version of Meta's platform, artificial intelligence language model, in a partnership between the tech giants that will make the software available to companies for the first time. The Meta AI model, dubbed Llama 2, will be free and available to developers building software on Microsoft Azure cloud computing platform, the company said Tuesday. I have no idea what Llama 2 is. Llama 2. I have no idea what this is. News about Llama 2. Let's click this real quick. Introducing Llama 2. Download the model. I don't even know what this is. See here. Llama 2 pre-trained models are trained on 2 trillion tokens and have double the context and length than Llama 1. It's fine-tuned models have been trained, blah blah blah. Our global partners and supporters: AWS, Dropbox, IBM, Nvidia's in here, Qualcomm, DoorDash, Intel, AMD, Zoom. Wow. T-Mobile. I have no idea what this is, y'all. But clearly it is a huge news. Clearly it is a huge news. And y'all, Zuckerberg is becoming the man of the people again, eh? open sourcing stuff now. Should we watch this? Let's watch this. Ooh, that's loud.
Excited for the users to have choice finally and a real competitive race out there.
Microsoft CEO Satya Nadella finally thinks he has what it takes to make Bing happen and grab some search engine market share from Google. His not-so-secret weapon?
This all started with us and OpenAI coming together with really a research agenda on moving the state-of-the-art of AI forward.
Microsoft is taking OpenAI's newest artificial intelligence model and intertwining it with Bing's search data, so you can chat with the search engine and get up-to-date information.
So the entire point of ChatGPT early on was to just sort of show the power of the large model and the conversational intelligence. We now have not only the current information that you usually expect from a search engine, but you can then have a full conversation around that current information and all the other information that came before.
On top of the new AI chat features in Bing, Microsoft is adding ChatGPT-like features to its Edge browser. So I came here to Microsoft's headquarters in Redmond, Washington, to get a hands-on demo of the new tools and hear Nadella's thoughts on AI. The first big new feature, Bing Chat, incorporated right into the front page of Bing, will be an Ask Me Anything box. Type in your query. Say,
the biggest winners of the 2023 Grammys, because I did not have time to watch it.
And up pops your usual search results, which Nadella says has also been improved with AI. But more interesting is this new chat box that will start typing out an answer to the question. As it answers, it also includes citations, so you know where the information is coming from.
It allows me to then have a full-on conversation around all the search data. So yes, it's annotated. It's about being able to create even the links back to all the publishers. So this is just search, just better.
The system took about a minute to return a list of the top Grammy winners. Not exactly fast, but you can tell it to stop responding. Then you can ask follow-up questions like,
do you know if Beyonce is touring? If you're a Beyonce fan, you might want to hurry and get your tickets before they're gone.
Like ChatGPT, you can ask it non-search type things too, like
write 10 questions for Satya Nadella about AI.
What are the key features and benefits of new Bing chat mode, and how does it leverage AI to enhance the user experience?
It really is grounded in search results and helps me have a very contextual chat to be able to get to the right answers.
Satya Bing said, or AI Satya said, the new Bing chat mode leverages AI to understand the user's intent, context, you said context, and preferences to provide relevant, visual, logical, and actionable responses.
I love the AI Satya.
But while these may seem like fun and games in these demos, there are, of course, real misuses of this technology.
We have a lot of practice in thinking about safety. AI is only good if it is being used in the real world, understanding, learning human preferences. And our intent is to do that, which is to put stuff out there with safety, but at the same time realizing that we are going to have to think about safety as an ongoing responsibility, not a one-time responsibility.
He also told me there are guardrails in place to prevent harmful content, hate speech, and more. The second big feature, Microsoft Edge integration. The Microsoft Edge browser will now have a Bing sidebar, where you can ask it to summarize a web page you're on, or ask it to generate text. For instance, I asked it to...
So I want to write about a letter to Satya Nadella, thanking him for his time.
Then I was able to tell it I wanted it written in an enthusiastic tone, in email form, and short.
It knows. That's pretty good.
There's a lot of fear that AI is going to take our jobs, replace us. Is that unfounded? And how do you think about tools like Bing now and how we use it in the job market?
Like I think of this as at the foundational level going to help us do our jobs better, reduce some of the drudgery in some of our jobs, whether it's in coding or in writing or in automating a workflow, or searching for information. So at the fundamental level, I think we need a productivity boost. I feel it'll create more jobs. The barriers to knowledge work will come down. So, I mean, the unintended consequences around labor market shifts are always something we need to be mindful of. But I don't subscribe to this zero sum or one lump of labor fallacy. And I think that we're going to have new jobs get created and more job opportunities.
And it sounds like more time, right?
For sure, for sure.
We outsourced some of this. Right? I outsourced some of my question writing to this, freed up a little bit more of my time to do something else.
But you're still in the loop and you're in charge because you get to accept the draft. That's kind of one of the metaphors I have. It's pretty much all computer interaction going forward. You'll start with a draft. That doesn't mean you don't get to inspect the draft, approve the draft, and redefine or and edit the draft.
The question is, which company will write that draft for us? Will it be Microsoft with tools like this? Or Google, which owns 90% of the search engine market share, and, right before my interview with Mr. Nadella, announced Bard, its similar AI chat feature that will come to its own search engine.
How are you thinking about monetizing this?
The last time I checked, search was the most profitable category there is on planet Earth. So therefore, all I need is a few more users, and someone else that I'm competing in has to keep all of their users and all of their gross margin. I'm looking forward to that.
So no plans to charge for new Bing. It's really advertising model all the way through.
We'll start there. And if there are other models, there may be other models. But there is enough surplus. Let me put it this way. There is so much surplus that goes to one place, which I think would be nice if it was evenly distributed.
What about Microsoft Office?
Just stay tuned. I fully expect us to introduce these capabilities, quite frankly, across the length and breadth of Microsoft.
What about this guy?
Oh, it's sort of like it was early, and so we get to redefine it for the AI age, and it's going to be very useful.
So is he coming back?
It'll come back in a variety of different ways. I think I'm most excited about Bing as the real incarnation of Clippy.
Okay, but no actual pop-up.
I think we have much better design mechanisms to do what Clippy aspired to do back in the day.
Does Clippy haunt your dreams?
Not really. It's probably the thing that was the most fun character Microsoft introduced, which, think about it, right? We have been on a 30-year journey to perfect it. So I'm excited to be here in 2023 launching Bing with AI.
I bet you are. This open source stuff is a big deal, guys. It's a big deal. Netflix. Earnings. Report. Live. Tesla. Earnings. Call. Live. Carvana. Stock. Carvana short squeeze. Carvana. Get into CVNA. Stock. TSLA. Stock. MSFT stock. Okay, we're good. Save. I'm gonna check CNBC real quick.
During the pandemic, but we really haven't done anything about it. How quickly, Congressman Krishnamurthy, do you think we can address those issues? And I'm glad to hear you honestly focused on that.
Well, I think that Mike and I are probably going to be recommending this as a part of a set of bipartisan measures that we'll issue as part of a report that will then try to transform into legislation. I think a lot of people here in Congress on both sides of the aisle recognize that something has to be done to onshore some of these products and diversify supply chains. But as we were talking about earlier this morning, there needs to be some incentives probably to bring back some of this manufacturing here to America. That being said, a lot of diversification is already happening in the private sector, even without government involvement. And where that's happening, that's great. But for other types of issues, whether it's the refining of critical minerals or having EV batteries built here, we're probably going to need to continue with incentives.
The idea of even having these debates and holding these things is probably pretty provocative to China. I'm sure they're not pleased about the idea of talking about separation. They've made it very clear that they don't like a lot of the language even around that really gets at the heart of feeling like they're being attacked. We are not at the point where we can stand on our own 2 feet. We are very much linked to this economy. So, Congressman Gallagher, how do you do this in a way that recognizes that it's going to be years that our economies are still so closely linked, and recognizes that these are the 2 largest economies on the planet, and what happens between us has pretty huge impacts around the world?
Well, I think intellectually you have to think about it both as a short-term sprint. There are things we need to do in the next 5 years in order to most notably prevent a war with China over Taiwan and reduce the economic leverage they might wield against us in that war. And also in terms of a long-term marathon. There are things that are going to take decades and decades of work. Onshoring in certain industries is part of that. But I actually think there are a lot of things we can do in a bipartisan fashion in the 118th Congress. So for example, one thing I think we can recommend is how we put sensible guardrails on outbound capital flows to China so that we aren't inadvertently funding our own destructions. One of the questions we're going to tease out in this debate is whether such guardrails should be company-specific or sector-specific or country-specific. And as we know, the executive branch right now, the Biden administration, is debating an executive order on outbound capital flows. So I think it's a mix of short-term things we need to do with alacrity, as well as a long-term perspective about how we improve our overall economic health, and a recognition that you can't selectively decouple without simultaneously drawing closer with certain other countries within the free world.
If this is a debate, I take it you have people who have both opinions, both that Congress is, or that China is a huge concern we need to do something about, and maybe the other people who look at it on the other side and say, well, there are things we still need from each other. Is that a fair assumption that there will be people from both sides? Congressman Krishnamurthy?
Yes, I think that's right. And I think that, we have to do this in a way where we don't do harm to our economy. But as you might have recognized earlier, the Chinese economy is in big trouble right now. Youth unemployment is like 22%. The real estate market is tanking. Growth is slowed to a crawl. And so this is the time where they should probably decide to play by global trade rules and engage with other countries. And perhaps there is an opportunity where, their current situation might materialize into better behavior. But until then, we have to make sure that we protect ourselves and we onshore what needs to be onshored, and we friendshore other items as well.
Gentlemen, thank you both. We'll be watching later today.
Thank you.
Thank you.
Coming up, big hour ahead, check on Goldman Sachs and other big movers this morning. And then a first on CNBC interview, the FTC chair, Alina Khan, and the DOJ's Assistant Attorney General for the Antitrust Division, Jonathan Cantor, will be joining us with some news this morning about some new merger guidelines that a lot of corporate America is taking notice of. Squawk Box coming right back.
All right, so Carvana's still up huge. Not as much as it was earlier in the pre-market, but still up quite a bit here. 19%. Snow is ripping as well. See if we have any kind of news for snow here. Nope, no news, just momentum here. Tesla up 0.5% here, pre-market. I'm really looking at this for next week. Let's see. What are those trading at? Tesla. Tesla. Let's look at next week. Next week, 300 or 11, 310 or 8, 320 or 6, 330 or 4, almost 5. So that's very expensive premium. Very expensive premium, which indicates that, you know, the stock can rip here. The stock can rip. It's been on a very steady uptrend.
Good morning. The Dow on a major winning streak. It's been higher 7 days in a row now. The last time that happened, more than 2.
Very steady uptrend here. Now, where do we go after earnings? I don't know, but I do know if. Well, I don't know, but I assume if we get good margin numbers, that is around 20 to 21% margin, we are gonna rip. 350 easy. 350 easy. Now, if we get around, I'll say less than 18% margin, we can drop. 280, 270 is gonna be. It's gonna be the target. But I'm watching this. I'm watching this for next week. I'm looking at the 330s here. If we can rip, because Elon did say deflation. Elon said deflation. So does this mean their cost went down and now they're making more profit? Probably. Now the only issue is that this quarter alone, Tesla has been reducing prices a lot. They have been cutting prices on cars a lot. So is that gonna take a toll on their revenue? Perhaps, I don't know. But Elon's a pretty smart guy, so pretty sure he knows what he's doing. Let's look at Netflix. Netflix, man, I'm feeling very left, feeling very salty here a little bit, because I was in this Netflix 500 calls for next week, 28th, and I got out of them. I got out of them around 450s, like 456 level. And now we're at, what, 485, man. Feeling very salty, man. 485. Huge rip. But I missed it. Probably should have stayed in, but hindsight. It's all good. Now, Netflix, can this rip? Yes, it can. Yes, it can. Now, it's all gonna depend on how many subscribers did they add this quarter or in the past couple months since they started this password sharing crackdown. Now, how many people are watching ads? Very important. Some analysts are saying that they've added around 3 million subscribers or users in the past few months. Now I'm going to go and guess they've added more than that. Because I know how annoying it was for me when I wanted to watch Netflix on my TV and I couldn't because the account is not mine. And the number one feeling that I had was that I need to sign up. I need to get my own account. So I'm pretty sure that's what most people are feeling. But can they rip? Absolutely. I think we have momentum on our side. The overall trend here is an uptrend, so we can rip, but we can also drop huge if they miss on revenue. If this password sharing crackdown does not work, okay, we can still drop back to 3 something here. Because when the password sharing crackdown news came out, I believe Netflix was at 380 something. So it can get back there. If this does not work, it can get back there. Carvana rip. On Carvana, 100 is possible. 100 is possible on Carvana. We got SPX. SPS got a $5,700 target. Okay, from 5,000. And look, we're only at 45.50. 45.50. And we got a $5,700 price target. That means analysts think we can rip another 1,200 points. 1,200 points in the second half of the year. 1,200 points. That is let's see. The all-time high was, what was it? The all-time high was 48.18. Okay, the all-time high was 48.18. If we go to 5,700, that is 900 points above the all-time high. 900 points. Insane. But this is the market we're in. It's insane, but this is the market we are in. It's the market we're in. Anyway, so watching XPX here above 45.52. Above 45.52. Call can work. Okay. I'm looking for to take 45.80 calls here above 45.52, 55. Target probably like 45.90 here. We can get to 4,600. We can get to 4,600 easy. Now below 45.52 is probably 45.26. Carvana, rippy. Another stock I'm watching here is Avago, Broadcom. This thing has a move waiting for it to happen. Waiting for it to happen. $920, $934, and $962. That's where it goes. If we keep the same momentum, okay, that we've seen in the market the last few weeks, this thing can get to 940. 940. Okay. So this is one thing I'm looking for here. Looking at. They also got approval, or I would say clearance, for the acquisition of VMware. which is why dot stock is also up huge. Where? See that? It's up huge. It's because they got clearance from UK regulators for the deal to happen. Another stock that's been ripping huge is AI. AI. Look at this. Look at this. Just rip. Just rip. That's huge. Now another stock I'm watching is CMG. CMG, I'm feeling very salty also, just like Netflix. Because the day before, the day before yesterday, I was in CMG 2175. CMG 2175 calls. 2175. Okay, I think they were like $4, so $400. And I entered. I got out around what 7. I think at 740. So about $340 profit. And the next morning, CMG had news that they are going to expand into the Middle East, and the stock ripped up 1.5%. Had I stayed in my 2175 calls, those that I took at 740, I said, or something like that, would have been like 22. So I left about $1,500 on the table. But can't feel too bad, because I mean, this is the game, right? This is the game. Can't win it all. And also can't go broke taking profit. So it is what it is, There's always the next trade. But still, it would have been nice. It would have been nice. It would have been nice to, to make that gain. Or those gains. So this is when I'm watching. Also, they have earnings next week. They are already at all-time high. So this is a hard one because they have very, very, very expensive premium. Like extremely expensive premium. I'm talking about like 20 points out of the money is like $10. Okay, that's like $1,000 for those people who don't know. 20 points out the money. So, not even. I'm talking about 20 points of the money is probably like for earnings, probably like 4K, 4,000. Okay. If we're talking about 200 points out of the money, it's probably like 10. Matter of fact, let's check. CMG, where you at? CMG, okay. We're gonna do for next week. We're gonna do 300 points at the money. Where we at now? We're at 2173 pre-market. Okay, so we're gonna do 300 points at the money would put us at where? 2500. So 2500 is 7. That's 300 points at the money. That is insane. That is insane. But with the expansion into the Middle East and stuff like that, can we get there? Absolutely. It's absolutely possible. Now, the only question is, do they go and expand all over the world? That would be nice. Tesla is ripping, man. Tesla is ripping. Above yesterday's highs. TSLA. Above yesterday's highs. Let's listen to CNBC.
Numbers and the state
really
of the
quick.
retail investor is Thomas Petterfy. He is Interactive Brokers founder and chairman. And Thomas, first of all, thank you for being here. Second, let's walk through the quarter just a little bit. What happened that was maybe below what the street had been anticipating? What caused some of those lower numbers?
Thank you for having me. Well, this quarter was our second quarter in which we topped $1 billion of net revenues. Unfortunately, we were hit by an unexpected large expense at the end of the quarter that took 12 cents out of our earnings. So,
and that was because of reserves related to regulatory investigations into the use of unapproved electronic messaging. I mean, is this the crackdown from the SEC?
Excuse me?
What happened? Was part of what you all said?
Yes, we were supposed to archive our employee communications, but as you know, the text messages that people use on their Apple phone, we cannot archive them. So that was the problem.
Has that been addressed at this point, though? It won't be a problem going forward?
Well, all we can do is to yell and scream at our employees to stop texting, right? There is no way to really enforce it, right? Other than saying, if you keep texting, you will be fired, you will be penalized. I don't know what to do.
Thomas, let's talk through a little bit of what happened with commission revenue, because that number was unchanged from a year ago at $322 million. But when you looked at trading volumes, that was a little more mixed. Options contracts volume up 9%. Futures contracts down by about 3%. But the thing that really caught my attention was the stock share volumes down by 28%. What happened? People aren't trading individual stocks as frequently?
That is true on the one hand. Secondly, our top holdings have always been the 7 stocks, the big 7 stocks, right? And as they have reached highs that people have huge unrealized profits in them, and they are simply not trading them anymore. They don't want to realize the gains. So all the volumes switched to went to options, where they write call options against these stocks, and they just keep rolling them forward, and therefore they don't realize the gains, and they hope to realize a continuing profit of taking in premiums as the stocks rise. They repurchase the calls, and they have a loss on the calls, but they have the offsetting gain on the stock. If the stock falls, they realize the premium. So this is what we're going to, I think, this is what will continue to happen going forward, because the gains are huge and the taxes would be huge, and they don't want to realize those taxes.
Okay, let's talk through that a little bit. I mean, you think it's that they don't want to pay big taxes, so they're not going to sell it. It's not necessarily a bullish sign? You think that they're holding on to these things? They don't want to sell it just because they think it's going to continue to climb?
No, I think they don't want to sell it because, look, I don't know what they think, but I mean, yeah, they think on the one hand that they are probably going to go further, and on the other hand, they don't want to realize the gains.
Let me ask you about a couple of things we've heard just in the last 24 hours or so. Yesterday, Walt Bettingers, who's the CEO of Schwab, said that on his platform that clients have been adding equity exposure in the last few months, and that the volume of buy orders on their platform is 20% higher than sell orders. He thinks that is showing some investor optimism. But then this morning, Bank of America was out with its global fund manager survey and says that there is still a lot more fear than greed out there, and that fund managers' cash is up to 5.3% from 5.1% the month before. Where do you kind of come down in this world of, are investors feeling optimistic, or are they feeling a little more fearful? How does it show up on your platform?
Our cash holdings, our customers' cash holdings have been around 30% throughout this period, and at this time they are down to 28%. So there is not a significant change. What has changed is that the value of the stock holdings has risen, but the cash basically remained the same. So cash altogether is only up 2%. For the quarter, and given that we are paying 4.58% interest on qualified cash, it's amazing the inertia that people have, that they keep keeping their money at banks where they get nothing, no interest, and they don't have send us their cash. It's just crazy. But that's what it is.
But optimism or fear? What fear or greed is the bigger issue?
Well, I would say caution. I mean, yeah, people are optimistic because what choice do they have? I mean, you have to be optimistic. Otherwise, you look at the growing debt burden and you say collapse is coming.
Right. Thomas, thank you. We appreciate your time. When we come back, we have some breaking housing data and our special interview with Jonathan Cantor from the Department of Justice.
Okay, guys. I'm going to end it here. I am coming back around 9 so we can trade live. We can do some live trading. Okay? All right. See y'all in a bit.